Hello and welcome to today's analysis. Today is a Sunday, the 25th of February. This is one of the many analyses that is going to come. For my name is the Golden Killer and I want to spread the gospel. So, let's say for example you are starting to trade the Forex market. It may sound like a lot intimidating. Where do I start? How do I go about it? Today I'm going to show you the thought process before the week begins. What should you start with? Where should you look at things from? So the most important thing to look out for in the Forex market is what you call fundamentals. Fundamentals is the gap between where price should go in the long direction. So you need to align your probabilities with the fundamentals. Okay, someone can be asking, how can I do that? We have a calendar. We have a what? We have a calendar. It's a free calendar. It's called Forex Factory. Now in Forex Factory, today is a Sunday. We're going to start with Monday. Monday, there's nothing that's going to happen. Not a lot is going to happen. Now remember, in Forex Factory you have these folders. These folders have various colors in them. What we want to pay attention to is the orange folders and the red folders. Now on Monday we have no high impact news. We're just going to have home sales. What is home sales? When you click on the new home sales, you click on the folder on the right hand side. Now it tells you the measures. It's the annualized number of new single family homes that were sold during the previous month. So actual greater than forecast is good for currency. Why traders care? It's a leading indicator of economic health because the sale of new home triggers a wide-reaching ripple effect. For example, furniture and appliances are purchased for the home. A mortgage is sold by the financing bank and brokers are paid to execute the transaction. Now when more people are buying houses, it means the economy is going to do well because houses are not cheap. Houses are not what? Houses are not cheap. When you look at the number, we have three types of data here that are being presented. The first type of data is called the previous data. So previous data is last month's data, of which they sold 664,000 new homes. This month we are targeting 680,000 new homes. That is an increase of about 16,000 new homes. Now when 16,000 new more homes are created, it means that the economy is going to do well. Now that is for Monday. When you go to Tuesday, we have core durable goods orders and durable goods order. Now remember, the same applies when you want to know the difference between the two. Actually it's always a small difference between a core and the impact. Now the change in the total value of new purchase orders placed with manufacturers for durable glue, excluding transportation items. Now when we go to the other news release that is going to be released, it's going to include transportation items. Remember, the first one does not include transportation, excluding transportation items. Now the second one is going to include transportation items. Now remember, if this data comes out better than forecast, it means that the economy is doing well. Now we are looking at negative numbers for core durable goods at 4:30. Now the same day we are going to have what we call consumer confidence. What is consumer confidence? What is consumer confidence? Now the measures is a level of composite index based on survey households. Actual greater than forecast is good for what? It's good for currencies. Now why traders care? Financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. Now it is a survey of about 3,000 households, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. Now remember, if this data comes out actual greater than forecast, it's good for currency. When we go to Wednesday, remember we are going to focus with the US dollar as of now. So we are going to look at anything that has the US dollar in it. On Wednesday, we are going to have prelim GDP, which is a quarterly data that is being released. Now, this is the annualized change in value of goods and services produced by the economy. So actual greater than forecast is good for what? It's good for currency. Why traders care? It is the broadest measure of economic activity and the primary gauge of the economy's health. Okay. Now, we are looking at The forecast is nearly the same as previous month, as last quarter, sorry. This is a quarterly release, and we are going to wait for what is going to happen. Now when you go to Thursday might be a relatively quiet. No, we have core PCE at 4:30. Now remember, as you can notice with the pattern, most of the news releases, I am in the East African region. That's why, but when you change it to New York time, it's going to be around 9:30 local time, 9:30 New York time. But for me, I'm in East Africa. So New York time, New York Open is usually at 4:30. It's usually at 4 p.m. and then at 4:30 is when we have the news release. Okay. So what is core PCE index? This is the change in prices of goods and services purchased by consumers, excluding food and energy. Now, why excluding food and energy? Because this one is a very volatile data. Why traders care? It's the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their containment mandate. Now, we are looking at a forecast of 0.4%. The previous number was 0.2%, and remember, if it's actual greater than forecast, is good for currency. Now we have unemployment claims. Unemployment claims is usually a lagging data. It's not as leading indicator, but we are going to have unemployment claims. Remember, when more people file for unemployment claims during the first time for the week, it means that they are not going to have any more money for purchase, they are not going to pay rent, they are not going to buy food, and so on and so forth. So the lower the unemployment, the greater the currency of that particular country. Now on Friday we are going to have ISM manufacturing and revised UM consumer sentiment. Now what is ISM manufacturing PMI? Remember, you just click on the folder. No, this is a level of deviation index based on survey purchasing managers in the manufacturing industry. So actual greater than forecast is good for what? Is good for currency. So above 50%, above 50 indicates industry expansion, below indicates contraction. Why traders care? It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers perhaps hold the most current and relevant sight into the company's view of the economy. So it is a survey of about 300 purchasing managers, which asks the managers to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories. Now, this is our weekly. This is our weekly calendar of what the dollar is supposed to look like. Now, when we are expecting a lot of news for the dollar. Now, remember, if most of this news comes out positive or actual greater than forecast, it means it's going to be good for currency. Now, what about if it comes out negative than forecast? It means that the economy is not doing relatively well, and we are going to see a drop in the prices of the what? Of the dollar. Now, how do you take this fundamental data and interpret it into the charts? This is what you're going to know next. Stay tuned. Now, ladies and gentlemen, this is my watch list. I basically look at 3 things. I don't look at a lot of things. That's why my watch list is named my 3 smart stooges. These are my 3 smart stooges. You remember the movies, the 3 stooges? Now these are my 3 stooges. How do I utilize the fundamental data and interpret it into the charts? Now, after analyzing fundamentals, that is step number 1. Step number 2 will be looking at the US dollar currency index. Okay? Now, it's advisable when you're looking at charts, you start from the higher time frame going down into the lower time frame. We are looking at the daily time frame. Now, what can we decipher on the daily time frame? Actually, let's go into the weekly time frame. Let's start with the weekly. And let's see how last week was. Now, as you can see, the previous week, ever since January, we have been trending upwards, meaning the dollar has been stronger. And when you look at the US 30, the Nasdaq, it has been trending upwards ever since what? January opened. Now, last week was the first candlestick that we had that was bearish. We did have one during the second week of January, but this one closed in a doji. But this previous candlestick, this one here, this was the most recent. So this was last week. And let's see about something interesting about what happened during that week. When we go into the daily time frame, I want you to notice something here, whereby we had relatively equal lows around 103.884. Now, relatively equal lows means liquidity, means that there are willing participants to engage in that market at that point. Okay, it's clearly shown when we go down into the 4-hour time frame. Let's go into the 4-hour time frame. Now, this is the region whereby we saw those relatively equal lows. Okay, here 103 point something. What happened? Prices went sharply down to the downside and then closed with the doji candlestick and then sharply retraced upside. Now, what is this? Our prices came down into inefficiencies. You see this candlestick that was printed here at February the 24th at 7 a.m. Let me change this first into my local time frame. Okay, so we have changed it into New York timing. Now, we were looking at 7 a.m. on the 24th of February, just before market open. Look at this. This is New York time, remember? At 7 a.m. we have that huge candlestick that engulfed the previous. Remember, we are looking at the 4-hour time frame. It engulfed 1, 2, 3, 4, 5, 6, 7, nearly 7 4-hour candlesticks in just one pre-New York candlestick. We call it pre-New York because New York was about to open. Now, when prices made this sharp move to the upside, it left imbalances. This is inefficient. Now, remember, prices is efficient in its delivery, meaning that it usually goes back to fill the inefficiencies. Now, what happened? As time went by, this one candlestick that we were looking at, remember the equal lows that we were looking at? Now, remember, these were the equal lows, okay? Prices went back down into the inefficiency and it covered around 50% of this move. 50% of this move, it's a psychological efficient zone whereby prices has to go back and fill the inefficiencies. Now, the most important thing is to look at how prices reacted afterwards. You can see that this sharp rejection to the upside. If you can go back into, if we go down into the hourly time frame, this is what we are going to witness. You can see how prices went and grabbed liquidity. Remember the equal lows? The equal lows were around this region. What happened? In 2 hours, prices sharply went into the downside and then started rejecting. Now, this is what we call a grab on liquidity. Now, it is the grab on sell side liquidity. Remember the equal lows, they are willing participants to sell the market when the market went below. Now, what happened? The market went and tapped into their sell sides, into their sell stops, and trap the sellers. Now, when it executes, it tags in their positions of sales, and then prices starts aggressively going back to the upside. It means that they are trapping the sellers, and the market is preparing to do what? It's preparing to make a huge move. Now, if we're told the data that's about to come this week becomes positive for the dollar, it will support our hypothesis here, of which if fundamentals come positive, if the dollar index has grabbed sell side liquidity and then it has rejected the 103.449, remember these lines, I did not draw it today, I drew it a very long time ago. And remember, prices are fractal in the sense that I don't know if you can see when we cannot tell when we drew those lines, but it was a long time ago, and prices went and tapped into that region exactly, and then it rejected. Now, when we look at, let's say, for example, the weekly time frame, what could be our scenario? What scenario could we be looking at? If the next weekly candlestick, now starting tomorrow, opens, goes down a bit, but respects the previous weekly low, we can start buying the moment it rejects this low. Let's say, for example, there, whereby I'm really sorry, my laptop is not, I forgot the charger. It was so dumb of me. But this is our probabilities that we are looking at. Now, most of the times I don't trade the dollar index, but I use it as a confluence. I'm going to show you the asset that I love the most. That I do what I love the most. Now, let's say we go down into the 1 hour time frame. Let's go back into the 1 hour time frame. Remember, we are using the dollar index as a confluence, huh? We are not trading the dollar index. It's very expensive to trade the dollar index. At least in my experience. Now this is what we'll be looking at. If at all prices opens up, now remember, if it opens up let's say tomorrow, and then it starts creating a pattern like this, so it goes down, we'll be looking for it to go into this region of 103.559 and then reject. If at all this resist, if the support level at 103.449 is going to play out, we are expecting a stronger dollar for the week. Okay, now if the US dollar index is showing bullish movement, now let's look at cheaper assets that we can be trading. Let's look at the cheaper assets. Okay, so this is my favorite asset class, as per the name suggests. I've been studying the gold market for nearly 1,000 days right now, and I have developed a nick for it. And when I say a nick, I mean a nick for it. Now, let's go back to the start of the year. Now, remember the dollar index started very bullish. The same thing happened with the dollar, with gold, sorry. Now, remember this is gold paired with the US dollar. Now, if the US dollar is stronger, it means the prices of gold are going to go down. If the US dollar is weaker, the prices of gold are going to go up. Now, at the start of the year, somewhere here, at the start of the year, prices have been going downwards ever since. Now, when you look at gold, if it makes prehistoric highs, there's a high chance that it may reject that zone with volatility, with high volatility. It doesn't make, unless it's geopolitical factors, let's say like wars, COVID-19 and all that. But in most cases, when gold makes a new historic high, it's going to reject that high a bit until sometime later on. So in a year, it can make highs nearly twice. Let's say if it made a high last year, December, so later on this year is when we can expect it to make a new high. But in the period that it has made a high, it usually rejects that zone with high volume. Now when we look, this is the weekly candlestick. So the previous weekly candlestick, as you can see, had no wick to the bottom. Now this is inefficiency. Okay, now this previous week moved to the upside and closed bullish. Now if we can remember the dollar index, it did almost the same thing, whereby it has been trending downward, it has been trending upward, sorry. Now when it trended upwards, last week was the first candlestick that printed bearish. The same thing happened with the dollar. Now when we look at this chart, we have this doji candlestick here. Now dojis are very important candlestick chart patterns. When you look at them, they show one of two things. They can either show exhaustion or continuation. Now in this case it showed what? Exhaustion, whereby the market trended down. We had relatively equal lows, just like we had them in the dollar index. You can see here whereby prices went down sharply and then it started rejecting. Now this is a short-term retracement to the upside. Now if this high at 2030, let me use the body of the candlestick at 2035, if the high at 2035 respects this previous high at 2055, it means that we have a high likelihood of prices going what? Going to the downside. This is what we can be looking at. Now remember how candlesticks form. Let's say next week opens here, makes a high. We can enter the trade here as it's breaking the high, as it's breaking the entry of the start of the week. We can enter a sell there, anticipating prices to go where? To go further downwards. Now our most ideal take profit one, you have to be realistic when you are trading the forex market. You have to have achievable targets. Now this is 1991. When you minus the two, that's nearly 440 pips, of which it's doable, very doable. In a week, gold, in a day, gold can move even 200 pips. When you look at previous Friday moved nearly 200 pips. Now it was trapping the sellers. Remember the people who had engaged in the market nearly this area. Now prices went into a bit of their profits, came back to the upside. Now we are looking for further continuation to the downside. If at all the news releases that are going to happen this week are going to occur in the favor of the what? Of the dollar. Now this is the 1 hour time frame. I want us to look at something here very important. Now this move here, this was CPI. Yeah, it was CPI. Was it CPI or PPI? CPI. Whereby prices, the news came out very positive for the dollar, and it was making a short retracement to the upside, filling these inefficiencies. Now as it filled the efficiencies at that region, look at how it closed below. Look at how it closed below the zone. Now when we are looking at this chart, remember, if data comes out positive, we are looking at positive data for the week. Okay, if the week opens, takes out Friday high, this is the probability we are looking at. This is the probability that we can be looking at. So our entry module will be around this zone. We will be looking to take a short position around this area. Our stop loss will just be above. Ideally we can wait. Ideally we can wait for prices to take out these highs first. Now as it's taking out the highs, and then we can target a sell to the downside. Now remember, long-term direction we are targeting, I should be targeting around 1986. The risk to reward ratio is huge, meaning if I expose myself to this trade, if I'm risking 1%, there's a probability that I may get 16% out of it. Now I'm targeting 30 pips to get a potential. Okay, let me just see, to get a potential 500 pips. Now 500 pips, it's a bit ambitious, but our TP1 should be around 250 pips. This is much more realistic. This is a very achievable target. Risking 30 pips in gold to get a potential 250 pips. Now this is the scenario for gold. Now let me look at my last stoogie, GBPUSD. GBPUSD, the same thing that happened, whereby it went and filled these inefficiencies that was left during CPI, and prices has been struggling to go to the upside. As you can see, this high failed to break this previous high, which shows that if at all the data comes out, remember we are looking at probabilities. If the data comes out positive for the dollar, you have to take a bias and then you stick with it. Now the same thing happens. Remember, GBPUSD and XAUUSD are positively correlated, meaning that if one goes up, the other one follows. If it goes down, the other one will do it. It will follow. We shall be waiting for, remember these are equal highs, assuming the wicks. So the bodies of the candlesticks are the most important to look out for. The wicks can be manipulated. The wicks are easily manipulated, so the bodies of the candles cannot be manipulated. When we enter a sell position there, our stop loss just above, and then we'll be targeting TP1 will be around 87 pips. So TP1 will be at 1.26143, and then if we can hold this trade, TP2 will be around 159. So someone could be asking, is this a scalp? Is this a day trade? Is this a swing trade? The easiest way is to look at this leg. Let's say, for example, we take this leg from here to here. It took 9 days, 3 hours to make that move. So it can be possible to take the same 9 days. Let's say before the month ends, we might see the lows at 1.2547 being taken out in the next 9. Today is the 25th of February. The week is about to, so the monthly candle will close next week. So before the monthly candle closes next week, the market usually tends to have a rush going to where the big money is. Now, where is the big money? The big money is in the dollar, whereby they are looking to, as of now, they are holding rates. Now, remember, if the US dollar holds rates, the rates, the interest rates, it means that the dollar is going to be stronger. Remember, we looked at the GBP. We are going to look at consumer confidence. All that data is going to have an effect on where the Fed is going to, whether the Fed is going to increase the interest rates or whether they are going to lower the interest rates. Now, this is my analysis. Remember, if you want more information, you can hit the Telegram. There's a link in the bio below. We shall be doing daily analysis like this one, in-depth analysis, whereby we decipher the markets. We try to look at the rhythm and the noise. We try to see, okay, where is prices are going to head to. We are going to figure out the patterns. Remember, within this noise, this is nothing but noise. When you're looking at noise, we want to see the rhythm and the noise. We want to see, okay, prices moved from 1.254 to 1.267. Why did it do that? Okay, now the group, this is free information. No one is paying me to do this. This is just out of free will, because first get the knowledge, then the money will follow. Get the skill, the money will follow. And when you do, the same way some people assisted me to get good in trading, I want to return the favor. I want to leave this place better than I found it, and my analysis is going to help me create better traders.